Hello, good afternoon. You've tuned into Your Stocks coming live from the CNBC-TV18 Motilal Oswal studios. I'm Vinny Motiwala. Thank you so much for tuning in. As always, markets as of now, you can see 25,300 on the screen for the Nifty 50. Will this sustain in the last 1.5 hours of trade is something that we'll be keeping an eye out on. But again, Nifty is about 25,300. The broader end of the market, that is also doing well. So yes, that is up 0.6% of gain almost for the Nifty mid cap as well as a small cap. We're seeing gains coming in there, and advance decline ratio today is clearly in the favor of advances versus declines, so not much of a worry on that front. What's not doing well is Nifty IT. That's down almost 0.2% even as of now when you look at it. TCS's numbers have come in, Tata Elx's numbers have come in. So all because of that, we're seeing some bit of a pressure today, selling pressure coming in on the Nifty IT side. Keep an eye out on that. PSU banks, they are doing well, and Nifty Bank overall is also doing well. We're seeing almost 1% of gains that is coming in for the Nifty PSU Bank. 2% actually, while Nifty Bank overall is holding on to gains of 0.9%. And we'll see earnings coming in next week for most of these large banks as well. So that is something that we'll be keeping an eye out on, especially next weekend is what we'll watch out for in terms of big private bank earnings over there as well. But yesterday, bank is what is managing to hold on to gains. But that's how the market setup is looking like. Nothing to complain on that front. But this is a show where we solve all those stock-related queries that you all have sent us. And to do just that, today we have our experts joining in with us. Shivangi Sarda, analyst, equity, derivatives and technicals, broking and distribution at Motilal Oswal Financial Services, as well as independent market expert Shahina Mukadam to answer all those queries. Shahina as well as Shivangi, good afternoon, and thank you so much for joining us on the show. Let me get started with the first query for today. We have this query that's coming from T.S. Narayan Swami, who's writing to us from Chennai. He's holding 20 shares of Sanofi India. This is at a price of 6,250 rupees per share. Long-term investor and wants to know whether to hold, sell, what should he do at current levels. Shahina, let me start with you.
Well, Sanofi, I believe he's gotten at higher levels. He must have gotten after the demerger. So a year back, slightly more than a year back, the consumer business was was demerged and is into a separate company, Sanofi Consumer. So now Sanofi India is just purely pharmaceuticals. And if you look at valuations at current levels, it is not cheap. If you see on EV by EBITDA, it's about 20 times. On even on market cap to turnover, it's about 5 times. The market cap turnover ratio. So I would say that while it has got good products, it's an MNC. You can actually exit at any bounce that you get because it is expensive. So upside will be capped from here on.
Okay, so that is the view on Sanofi India. And like Shahina has also mentioned, there's a different entity. The part of the consumer business is now separate. So that is also something that one should keep an eye out on. Shivangi, your view for Sanofi India. They are holding Sanofi India as the viewers query on.
Thank you for having me. So we've seen that, technically speaking, the charts of Sanofi have kind of fizzled out, and we've seen on a calendar year basis, this stock is down by 25% this year. And we've seen that, any minor, attempts of recovery have not been respected. Even, last week we saw that there was some bit of support-based buying, but then the momentum is clearly missing at any small bounces. So, the capital has, eroded in this stock for the longest times. And I would recommend, one can exit and, get into better momentum stocks which are in flavor.
Okay, there are better momentum stocks that could be in favor, not too positive on Sanofi India. Can look at other names. That's a view there. Let's move on to the next query for today then. We have Shubham Vijay, who's writing to us from Pune. He's holding 28 shares of Allied Blenders. This is at a price of 281 rupees per share, making a good profit on this one. The other one is 10 shares of BHEL. This is at a price of 301 rupees. He's making a loss on this one right now. Wants to know what he should be doing now, whether to hold, sell, look at averaging any of this as well. Shahina, your view.
Allied Blenders, he's gotten at a good price. The IPO price was 281. So I would say even at current levels, he can continue to hold because the funds that they raised via the IPO, about 1,000 crores came into the company. That was utilized to repay part of the debt. So the interest cost has come down substantially. So while turnover is showing a steady growth, we are seeing the profits jumping. I think in terms of valuation also, it is not too expensive. given the fact that they've launched two new products in the last couple of years in whiskies. Pretty well they're doing in terms of they're an Indian distillery company. So I would say hold Allied Blenders. He's gotten also at a good price. Now, as far as Bale goes, I would say it is better to switch to L&T. See, Bale has got huge orders on hand. Order book on hand is almost about 2 lakh crores. But the problem over here is the operational implementation that they're doing of these orders. First quarter, they run into losses. Margins were under pressure. Now we'll have to keep waiting and watching. So to that extent, I would say to be in a safer stock, better to be in L&T.
Okay, better to be in L&T than BHEL is what you're saying, right? Okay.
Yeah.
That's a view coming in there on the fundamentals. On the technicals, Shivangi, what's your view? Allied Blenders as well as BHEL. Allied Blenders, they're making profit. Should they book out profit, look at some other name? And BHEL, are these levels that one could look at maybe averaging, Shivangi?
Right, Blenders, we have seen that, this stock has been making higher top, higher bottom from the last 6 months. Technically speaking, it is quite strong, and we are, seeing that it is maintaining its upward sloping channel on the weekly basis as well. So steady returns over here. The returns have been quite stable over the spread time, which is positive. And it's taking support near its 50 DEMA multiple times that we've seen from the time May 2025 till date. So, of course, this stock is quite resilient over here. I would recommend a hold here. One could, of course, trail their stop losses ahead, and we could look at a support of 530 as an important level as a trailing stop loss for the next potential targets of around about 580 to 600 levels positionally. Now, of course, talking about the other stock, BHEL.
Yeah.
We've seen that, on the weekly basis, this stock has started to make, recovery from the last 4 to 5 odd weeks, and it is kind of recouped all of its losses of the previous, August month. Now, it is sustaining at the higher levels, but again, momentum is slightly missing over here. But of course, if one is holding it positionally, I would recommend we can still hold on to this one. Trading perspective, not so much, but positionally, the targets are looking good for 260 odd levels with a support of 235.
Okay, 260 odd levels for BHEL. Keep an eye out on that. And support level is also what you mentioned. Thanks for that, Shivangi. Next query for today, we have Meera Vasudev, who's writing to us from Hyderabad. She's holding 100 shares of Bajaj Auto. Price is 11,000 rupees. 11,700 is what she's bought it at. She's a long-term investor, doesn't mind holding this stock, but wants the view on this front. Shahina, the last time we spoke to Bajaj Auto as well, they said that, the first 11 days right now so far was very good in terms of the festive season. Obviously, GST is something that comes as a benefit for consumers. But overall, what is your thought on Bajaj Auto?
The investor has gotten at very high levels. And what I would say is that even from current levels, the stock is not cheap. Still, I would recommend a hold. So I'm not saying to switch or get out of the stock, but hold it for long term. But I would say that because valuations are not too cheap, if you see price to book is about 6 times, EV by EBITDA is about 18 times. What I would say is that it could take some time for the investor to recover his buying price. Also, there are issues that could come about with regarding to the availability of important components that are imported from China. So to that extent, there may be some production issues. Otherwise, I think volumes in the last month were pretty good, as you mentioned, and the GST cut has been fully passed on. So hopefully, in the second half, volumes will be much better. Exports they're doing very well, and it is supported also by the rupee depreciation. So on all factors, it is reasonably priced, not cheap. So you can hold it for the long term.
Hold it for the long term. That's a view coming in. The buy price is clearly, I think, one of those highest that we've seen at least in the last 5 years when I was looking at it. So, Shivangi, your view for the viewer, should she maybe look at averaging at these levels because she's bought it at one of those highest prices, 11,700. What should she do now?
So, of course, Vinny, the buying price is quite high. But overall, if we look at Bajaj Auto, simply the chart structure right now, we have seen that, the auto space stocks have shown a little bit of tailwind from the sector cues. And we've seen that, of course, seasonality wise also, these quarters tend to be quite positive for the auto stocks with respect to the festive buying and also the tax buying, which happens towards the end of the year. So overall, stock is getting ready for a good up move just right now, and it would be a good time to even enter and and average their positions. But of course, there is. Slight bit of, I would say the momentum is slightly less than the other auto stocks. But if we talk about the levels per se, positionally, we are looking at 9,500 for Bajaj Auto, and the support would be at 8,650. So these could be the levels to watch out.
Okay, keeping an eye out on those levels over there. Thank you so much for that, Shivangi. But do stay on with us, Shivangi, as well as Shahina. We're going to take a very short break. And viewers, do stay on with us as well, because we are answering more of your stock-related queries after the break, so don't go anywhere. Welcome back to your stocks on CNBC-TV18. We still have with us Shivangi Sarda as well as Shahina Mukadam to answer all the stock-related queries. Let's move on to the next query. This is also again coming in from the auto sector. We have SK Datta, who's writing to us from Kolkata, and it's an investment query. He wants to know if he can purchase Hyundai Motor shares at the current level. Shahina, your thoughts on the fundamentals for Hyundai Motors?
He can buy it if he wants, but at much lower levels than the current price, in my view. After that tepid listing that it had, the stock has run up. Now, I would say closer to 2000, in my view, would be better bet in terms of valuations. The stock ran up because they did pretty well. Even last month numbers were very good. With the GST cut, the volumes, they actually reported very good numbers in September. So there is hope that second half will be better. At the same time, I would say that be cautious. Like we saw in the first quarter, the numbers were very depressing. Lower profits, EBITDA was lower, turnover, they were not very exciting numbers. So I would say be cautious. Don't buy it at these expensive valuations. Buy it at dip.
Okay, buy it at dips, that's the word on the fundamentals. On the technicals, Shivangi, what is a level that one could look at for Hyundai Motors to buy it? Right? Because in the last 1 year, when you're looking at it, it's gone up almost 32%. Does it make sense right now, or should they wait, like Shahina is saying?
Auto space is in a lot of flavor, and ahead of these months also, we expect a lot of momentum to continue. Hyundai, if we talk about the stock per se, we've seen profit taking in the last 3 weeks, and even on the monthly basis, it's given up most of its gains of the September month. And of course, this stock has been, trading quite well in the last 6 months. But overall, I feel that, it has broken an important exponential moving average, which it was holding from quite a long time. So I would recommend a little wait and watch over here. And, one could look at 2250 odd levels to again re-enter, which is an important retracement level as well. But nevertheless, if you want to focus on the auto and related space stocks, I would recommend the two-wheeler space, which is looking quite positive. So one can look at a TVS Motor or a Hero MotoCorp for that instance. The momentum is likely to be more over there with resilience. Okay. So this would be on my take.
Okay. So you're saying more on the two-wheeler side would be a better bet right now, and otherwise the levels that you've mentioned for Hyundai Motors, keep an eye out on that 2,250, I believe, right? Okay.
Yes.
Let's move on to the next query then for today. We have this one coming in from Mohit, who's writing to us from Mumbai. He's holding 100 shares of Vedanta. Prices for 49 rupees per share. He wants to know whether he can hold it for 2 months. So this is a short-term query, Shahina. Just 2 months time period is what he wants to hold it for, making some bit of a profit here.
I would say that there is a bounce. So for a short term, yeah, he can continue holding. Even fundamentally, there are positives as well as negatives. They are talking of actually splitting the company into five units, and it has got good assets across the board. Like for example, you have zinc, you have aluminium, oil and gas. But at the same time, the government is putting a lot of caveats in its plans to reduce its debt by way of offloading stake, subdividing the company. So I would say that, yeah, take the bounce that you get to exit.
Okay. And just a quick word, Shivangi, what should they do for Vedanta? 2 months, any target that you have?
So the Vedanta has been doing quite well, and it has recently surpassed its previous hurdle levels of 480 odd levels, and looking quite positive. In fact, the metal space is quite lucrative and has participated in this rally. So we're looking at 515 as the next immediate targets for the next couple of months, and 470 would be an important support to watch out.
Okay, keep an eye out on those levels over there for Vedanta. But that was the last query for today, ladies. So thank you so much, Shivangi, as well as Shahina, for joining us as always. Hope you all have a great weekend. And viewers, thank you so much for sending us your queries. Keep sending them in, and we'll be solving them on Monday, Wednesdays, and Fridays at 2 p.m. on your stocks. But don't go anywhere. Last hour of trade is still left. So you have closing bell up next.